following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. 877-927-6648 is the number to call. Now, this is going to be very interesting because the Dow is at this particular point up 191 at 17,600. To me, the 17,600s, that's the clue to further progress, or we start to see testing of support levels. And the S&P is up 25 at 2,061. The comp index is up 60 at 4752. The VIX is now down at 17. It was at 20. Look at this. Let me show you something. The volatility index that I always make a big deal about. Maybe now I can call it a peak F top. I can get rid of that and call it an F. It could recycle higher, but right now that's an F. And at 26.72, we've seen a whopping pullback, 9 points. That takes us down to a level of just under the 200 period exponential moving average. And the weekly chart is testing the 200 period exponential moving average. And that's the reason why you are seeing sustained buying as far as I'm concerned. The peak E top with an Eiffel Tower turnaround, capital A, up, straight down. In the 120-minute chart is now way below the 200 period moving average of 17.89. It's at 17.06, down $1.60 now. Why do I make a big deal about that? Because as far as I'm concerned, it's all about the numbers, the intensity of buying pressure, intensity of selling pressure. Now, we're going to look at this step by step. The Dow INDU, look at this. Above the 9-period exponential moving average as we speak, it's at 17,600, gapped up. Big day yesterday, big day today so far. And that horrible candle of Friday, 600 points down. We're not even halfway into it, but this is a spectacular comeback in such a shorter time. And what it's saying to me is we cannot rule out. You remember Thursday at the close, we were looking at, I mentioned that the close was fantastic. All the indices that closed at their highs, it looked like it was very powerful. And the big concern was what would happen with the news as it came out overnight into the morning hours. And of course, we know what happened. Now, the big question is, as far as I'm concerned, are we looking at an incident of, how can I put it? Is this, we're driving down, everything's fine, we've got a green light, and we're just tootling along, everything looks just great, and a big Mack truck just comes and slams into us. And that was those 2 days down in Brexit. And now we're just continuing on our way, as if to say, oh, oops, that was just a mistake, you're okay, you can keep going. The weekly chart took quite a hit. And it's going to take quite a bit to repair this weekly 200 period exponential moving average. But that doesn't mean to say that that whole area at the 17,000 level in the Dow couldn't, in fact, turn out to be tremendous support. So I'm keeping that in mind. Now let's just continue. So we have support at this particular point on a shorter term of 17,420 to 17,380. There's just whatever news it is, there's a sudden turnaround, a very sharp turnaround. I can't see it with the VIX being this low. And on the upside, 17,633 to 17,671 should offer very strong resistance. They could go into tomorrow where we get maybe a doji candle. And then Thursday, that is Thursday, and then the last day of the week. That's the last day of the month. And tomorrow being the last day of the month, it closes out our monthly chart, so far looking quite good. But what it does is, it sets up for the weekly chart to see where it's going to close on Friday. All right. Now the S&P. Let's just do them one at a time. We've got plenty of time for this. S&P is up 25, up 1.23% at 2,061. Slightly better percentage than the Dow. just above the 9-period exponential moving average. It too failed at a peak B minus. It's at peak C in the weekly chart, and it has 2000 and what is that? 2000. It's almost there. 2000 and about 65 is the 9-period exponential moving average resistance in the weekly chart. MACD still doesn't. It's flattening out. Hasn't crossed negative, so that's a good thing. But the stochastic is down at 60%. So that means that the daily has a lot of work to do, but that monthly still looks good. Let's go to the QQQ series. This is looking much, much weaker. The top that was made at a peak set at 110.75 reversed down. It came all the way down from 110s down to 101s, trading at 105.71 at resistance right now. So I think this is the laggard. So let's go to the IWM, which is the laggard as well. And you've got, yep, IWM is very weak, and the New York Stock Exchange, NYA, so the IWM is 112.24, up $1.87. New York Stock Exchange, remember I made a big deal about this because of this particular pattern right here. Remember I said, uh-oh, for the 2009, September 2000, top at 71.64. Uh-oh, that's when it started to fail after that peak B, trough B went to an A minus. The October 2007 high at 10,387, 3,000 points higher. I said, uh-oh, when the trough B ran to an A and became an A minus, and it failed. And then we went down here to a trough B after the May high of last year at 11,254, and that's 900 points higher. And it pulled back sharply, ran from trough B to a peak A, and then it made a squeaky leg B to the upside. And this is still leg B on the monthly chart. And it's holding above the 9-period moving average. It's in that green line, the 20-period exponential moving average. So it's still an uh-oh question right here. But so far, I must say that the difference I'd mentioned before is that the MACD had flattened out, was still much more positive than it was earlier in that when you had that decline in 2008. And the stochastic was rallying much better, and it didn't do that in either 2008 or 2001. It rallied just a tad and then failed. So this has many more positives going for it. Oh, I said I'd always show you the 10-minute chart. I forgot. Should have shown it earlier. This extended up. It went to a peak D just above the up channel resistance line. Now it's turning that line into support at 2049. This is the 10-minute E-mini. It's made a leg E. I do believe that we're getting closer and closer to some kind of sideways to slightly down. Let's call it a rest period in the 10-minute chart. Okay, let's come back to this. And we're going to go to gold. Gold at this particular point is not C. That's corn. Corn is in a down move, very sharp down move. I'm going back to that. I just hit a C instead of a GC. All right. Gold is holding quite nicely. Made a peak D top at just above 1360, trading at 1327. I have to tell you that we're looking at gold having a high-level consolidation, and it is very impressive as gold, even under these conditions where the market is running, is holding well. We look at the dollar as we're about to go out. The dollar is down sharply. We'll look at crude oil. And crude oil is right here. Strong move to the upside, 49.08. I had questions about that. We'll be back. Basil Chapman, Tiger Technicians Hour. Be right back. Dow's up 109.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so let me just finish that up there. And I've got, so crude oil, I had a couple of questions about crude oil. Let me just treat it as the continuous contract of crude rather than going into the different months. I know it's very important to look at the different months, but I just find it easier to be able to look at one core instrument, and that's crude oil itself. And when I'm looking at this, it's gone above it wasn't going to do that earlier. It looked like it was really stuck. I can't say it wasn't going to do it. It didn't look like it was going to do it. That pink, that coral color, 200 period exponential moving average of 48.76, we're above it at 49.02. Now, it's going to be very important. A couple of things here. Let me see if I can find this. 1 second, go to my 30-minute chart. Right, nope, I haven't got it there. Oh, there it is. Okay, let's see what this one does. That's 120 minutes. Here's the 30. I think this is the 30. Yeah, so this is very interesting because within the context of the 30-minute chart, crude oil has spiked up. I have to call this an F right now. It might be a brand new A, but I'm calling it an F just for the moment because of this trend line. You'll see this trend line. Let me make it a different color. Let me make it red. Let me make it thicker. And you'll see what I'm talking about. You see how beautifully this trend line has just acted as resistance? So we're going to see whether or not this becomes resistance at this particular point. But it doesn't mean to say if it becomes resistance, it has to collapse. Look, every other time it pulled back. It was only one time it went from one level of the up channel to the down part of the up channel. And then when the crude oil numbers came out an hour ago, it spiked down and it spiked up. And it's done this. Look there. It's defining for you the exact parameters. And it says that if crude oil breaks above 40, the answer to the question, Sarah, is if crude oil breaks above, was it Sarah? Judy, I think. If crude oil breaks above 49, let's call it 49.30, just to give it a nice round number. Yeah, then it could start to go to the 49.50 area, and 49.43 was the high back on the 21st of June on this 30-minute chart. So at this particular point, I think it's just bumping into resistance. We'll see how that resistance acts. We'll see how the market itself reacts. You've got this leg E at the moment in the 10-minute chart. It's going to have to make a quick pullback under 2050. It's at 2053 on the 10-minute E-mini chart. If it recycles higher from here, that's going to be very interesting because the Dow is up 200. Now it's in the 17,600s. This to me says that it kind of negates this pattern here that I spoke about yesterday. This one here. Actually, I should go to this chart. Let me go, if you don't mind, just for a second. I'm going to go to this chart right here because I've got the arrows in to show what to look for right here. Okay, let me just drag it across. This is my opening call. I'm going to show you something very interesting in a few minutes. Let's go to it over here. Over here. This chart would be the one that I wanted right over here. Yep, there it is. So what I had said is the pattern has changed because of this big candle yesterday. We only saw an up move back in, I forget now where it was. I think it was in March. Yeah, no, in January. January the 12th and 13th, we had a pop to the upside, and then it failed. This is more than a pop to the upside. This is actually a very powerful move, up over 200 points yesterday, up 200 points already today. This is saying that you cannot ignore the fact that we could make an arch formation start to reverse by the week's end or early next week. But at this point, you've got to be impressed that it's changed the pattern. And that pattern came from a waterfall cascade. We were having that on Friday and Monday. This is different. You don't have rebounds like this in a waterfall cascade. That means that if anything, it's going to be an arch formation with a retest of the low 17,000s. So far, this is very positive. All right, that's the chart I want you to show. And now let me just continue for a moment. I want to go back and just talk about, look at this. So crude oil, I think, is getting to a little bit of resistance, but it's a high-level consolidation. It's held the up channel support, that dashed line. So far, so good. I remember I talked about gold and crude oil, saying I just don't think this is the time to be shorting it at this particular stage. That's number one. Number two is, let me go to this chart here. It's a phenomenal chart, a chart that you would never even dream you could see for 31 years. This is U.S. bonds, 30-year Treasury bond continuous contract. I don't know really how to count this. Is this G/C? Everything about it says it looks like it's a C and that we should continue with low rates for another couple of months. That's number one. Number two is, look at this, TYX.X. This is the inverse. Look at, if I show the blank screen there. Look at that. We haven't made a new low yet, 22.26 on the yield. So this is interesting. Bonds have gone to an all-time high. Yields have not yet gone to an all-time low. So on the contract, that is. But look at this. This is since September 1981, where we made the top, we had a big zigzag. It's like almost like a butterfly move to the downside. It expanded from a 1-to-1. It went further. And then what happened, it bounced. And then from the high of October of 1987, the crash low at, what, 1336 or something in the Dow, we started to move to the upside in the market and a downside in bonds. And we've been in this bear market since this channel. We've been in the channel since 1987. We've been in a bear market since 1981. This is not 2001. This is 19 in the 20th century. So this is incredible. All right. So let me get out of this now and show you something else. So that says that my Japanization of bond yields is continuing, and so earliest monthly peak on bonds is August. That would be a D. Correct. That's the way I'd be looking at it. All right. So we've done a bunch of those things. I'm not sure really what I can do more. EUR, USD, trying to rally here. USD, JPY currency pair. Same thing. I don't know what else I can do. I think we've covered a chunk of stuff that's really important. DXY, I didn't do that in detail. This is a very nice single leg A. We'll see if this move holds at 95.82 in the dollar, down 42 cents. And if 95.20 becomes the support, because below that you've got a lot of support at 94, 98, 94, 35, and 90. I'd say 90 in the whole 94s to 94.30 is very good support. And 95.02 is the 9-period moving average weekly. So far, the dollar's holding up okay. And the euro, the EUR, I thought I just did that, EUR USD. Yeah, EUR USD, look at this. Let's just do the EC, I think, is that the euro? The Euro FX continuous contract. Yeah, it's the same sort of thing. All I can say is that this is a market now that is becoming US-centric. I think that's really the issue. It's becoming the market of choice at this particular point. Okay, now we want to do a couple of things. I think I've covered questions that were showing up there. I have. The Dow just one question about the W pattern. It's a good question. So Bob says, is the W pattern stronger than the V sharp in the data? Because you sounded, what did you say? You sounded, oh, wrong mouse. You sounded, quickly, jump. You sound like you're looking for a sell-off. Okay, so I'll explain that when we get back. Basil Chapman, Tiger Traditions Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So we're looking at my Chapman Wave triple yield chart with the notations. This is the white is the 30-year, the brown is the 10-year note, and the cyan light blue color is the 5-year. The 5-year finally broke to the lower low. 10.08 was the previous low back in, I think it was February of this year. And now we're looking at it this week with a lower low trough leg B to the downside. Most importantly, it's leg D to the downside, way lower than the previous low in the 10-year, and the 30-year is way lower than the 2409 low that was made back in February. It's at 22.57. That is feeding the market. There's just no question about it. Now we need to look at these charts. This is Wood, WOD, the weekly iShares Global Timber and Forestry ETF. Made a peak D, is pulled back very sharply. This is not a very big bounce here, so this has to be watched. And the weekly chart of HGX, this is the Philadelphia Housing Sector Index, made a peak D back in August of last year, 252. Came all the way back down to the 180s, ran up to the 240 level, and now is pulled back, and it made a peak C, and it's arched over. If this index closes above 234.20, the high of the 24th of June, I think it's going for a leg D, and that will speak to the low interest rate scenario. If it fails to do that, instead takes out its low of this week of 218.28 over the next 2 weeks, that's just not going to be a good sign at all. So we got rid of those. Let me get out of these charts now. There are a couple of things. Close the workspace. There it is. Save it. Yep, yes to all. Now, here's something that I think is quite important. Within the context, this is the commodity index. The commodity index needs to break about 435.48, the high of the 8th. This is the TRCCI, the Thomson Reuters Continuous Commodity Index monthly chart with the Chapman wave notation. A whopping leg 8 to the upside. We've seen these big moves before. How long will it last? I'm not sure. But in the meantime, this is a spectacular move. There's no question about it. So was the one from back in October of 2013 going away, all the way to from the 500 level to the, what was that, 560? Yeah, 569.70. Around about 570 before it collapsed, and so this is very important. That's the second thing I want to talk about. The other one was that if this makes a new recovery high, that starts an alternate wave F/B in the weekly chart. But the stochastic and MACD are really strong, so I will be conservative and say F. But there's a chance that it has recycled. Although it'd be very unusual to walk the 9-period moving average like this on the weekly chart for so long without coming back to test it at the 419 area. So this is very good action. Now let's just continue. I want to do, it's a very interesting market. We had long positions. We added one yesterday, which has done fabulously. It's up about 3 or 4% from when we bought it yesterday. I think about that. We just missed. Today, I wanted to buy GE. We missed it by a penny pre-market. And it's at 30.45. And there's a reason for it. I use it as an indicator, but at the same time, I thought if GE is going to lead, it's going to lead us and give a very positive reading to the general market. And so far, it's been a leader to the downside and the upside. But the weekly chart has me a little bit concerned, but I thought I would like to be in it at the price that I recommended. We didn't get it. And then suddenly there was news. It just took off from that moment, missed by a penny getting an entry point. And then it just took off because they've been cleared. They in terms of the regulations and all that, it looks like things are pretty darn good for GE finally on the financial side. So this is a good move. It's given back some of the gains, but it's still up 54 cents at 30.48. I'm not happy that it gapped up like this. I don't actually like gaps, but I love the weekly chart, the way it looks. So we'll see, because the reason is that my monthly chart, I've tried to count this umpteen ways. I really think that was a peak B, and that should go to a C and a D over a longer term. So that's that. Now, so we missed that one. Then there was another stock that I wanted, and I only wanted it on certain conditions. I thought I'd mention this because I need to give a feel for kind of what I do in my opening call. So this is a low price stock. It was trading at 10 to close yesterday at $9.91. And I had said I want to buy it before it goes above 10.14 for leg D. I wanted to buy it lower down. And I wanted to buy it before 10.15 is hit. That's 10.15 the price. And I want to buy it at 9.78. So it did not pull back. In fact, it gapped up. 10.01 was the high. And now it's in leg D. It's kind of gone to my target price of 978 to 1030, where the high today is already 1040. That would have been a fabulous percentage move. The only reason was I don't like to go for just leg Ds, because after D you can get a bit of a pullback. But if we got it at the lower level, that weekly chart says, hey, I'm only in leg C and my technicals are really good. And this is BCOR trading at 1029 up 38 cents. Blue Cora Inc. And it does technical and financial software for businesses and tax professionals. So it just seemed in the right area. Just a lot of it looked good for a retracement. I don't think it's made the major turn yet, but it is really improving in the weekly, and that'll help the monthly. But we missed that entry point. So I thought I'd mention that. And then there was another one that we didn't get it because it's already made the move that we wanted, which was KHC. And that is Kraft Heinz Company. And the reason being, I wanted this leg B to either extend or in the monthly chart, even though these are old companies, this is a brand new chart. And even brand new charts have a tendency to go to leg D in the Chapman Wave methodology. So I thought if we could buy it on a sudden pullback, it would be great. Well, it didn't pull back. I said to buy it, start a small position long at 84.60. The low today was 84.70, so we missed by 10 cents, and it ran all the way to 86.33, and it's making a nice high-level consolidation, which says at the moment it's able to get into the 86.70 to the 87.50 area, that's going to be a really good sign for the Kraft Heinz Company. Well, now it's off the list, at least for now. I just wanted to show you the kind of things that happen. So in a big move like this, sometimes the gap up is just too big, and you have to step aside. But I did want to show just how it works and why it works, and what my thinking is. And for Heinz, it was ready to be in a defensive area that's shown favoritism. The market has liked this. Let me just see Kellogg's, where that is. Kellogg's is just holding steady at up 35 cents, but it's also had a high-level consolidation. These stocks have done very well. Now, is this really a topping aspect for Kraft Heinz because now the money is flowing into other areas? I'm not sure, but as a kind of a safety and a dividend stock, I think it looked like it could have a high-level consolidation, but I didn't want to buy it closer to the highs. I want to buy it closer to the recent lows. So I just wanted to give a sense of what we're looking at. Yesterday, I showed that the IBB had a fabulous chart formation in the weekly. It had retested 240.03 to 240.30. That's a successful test. I wanted to go long. I stepped aside for a moment. Whoosh, it took off without us. We've had fabulous moves, fabulous trades with positions actually on the IBB. I don't feel, I mean, you missed some. We've got an equal percentage move, and even an equal move in one of the stocks that's moved higher. So I'm just saying, in the overall portfolio, I like to look at different things. I like to look at different prices: low price, medium price, high price. I'll be right back. Basil Chapman, Dows up 2 cents.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Wow, I'm looking at a stock here. You know, I'd seen this a while back, and I was impressed. And then it just completely went off my radar. I am so impressed that I'm going to talk about it right now. Let me just finish my notation here. Let me just see, is that a top now? Folks, we're looking at a stock. Look at the chart. 3805, 3812, so that's not there. 3881, 38.4, 3898, not there. Oh, man, this is really something. So I'm going to do this. It's very unusual for me to do it. I'm going to do this a peak C1 in a monthly chart. I don't often do it, as I say. The peak C2, everything about it said that that's really the correct notation. And I just want to make this is where we go with this. A, B, C. Folks, we're looking at RAI, trading at 52.78, up 52 cents. I was asked about it, and I can't believe this is Reynolds American. Aren't they in aluminum? I thought Reynolds, unbelievable. But they have other products. American is, Reynolds, give me a second, trying to do 2 things at once. Inc. Yes, look at this. It's just a beautiful looking chart, walking the 9-period exponential moving average. A couple of times it closed under it, but since 2009, it's just been Oh, of course, tobacco. I should have known that it was a tobacco company. And yeah, they are trying to raise the age limit to 21 in Massachusetts. Boy, give them a chance to tax everybody, huh? So a good article there about who doesn't know that people got huge amounts of money in terms of course, once again, I'm doing 2 things at once. They got huge amounts of money in terms of rewards for lawsuits against tobacco companies. But I documented years ago when I was doing that study of was it the New York Times or was it the yes, it was a New York Times financial section going all the way back to 1920. Every day, I looked at every column I read. There was a fantastic writer for the New York Times financial part. He just gave the stats, and he gave opinions only when it was really required. And he was one of the few that, for the very first time in 1929, in about March, started to say there was a lovely term they used for it. Is a very flowery kind of thing about the market being excessive. And I looked at that and I thought, this is really quite amazing. So, so ever since then, and in the New York Times, they had articles about tobacco and how bad it was for you, and that the statistics coming out were evidence enough. So there it is. All right, Rich in Portland, I'm sorry to keep you waiting. Rich, how are you?
Fine, Basil. Thank you. I was looking at Goldfields. I'm in it
All
right
right.
now with the Brexit under everybody's rear view mirror for the moment. Does Goldfields still look like something that you would hold here or exit?
So let me put it in terms that I think makes the most sense. Now, markets don't always necessarily make the most sense until you look in the rearview mirror. As you say, in the rearview mirror, very often it says, "Oh, yeah, that's right." But I'm going to do this. I'm going to call that E/B and F/C. I just want to do a quick. I usually done a lot of notation on Goldfields, but in the meantime, I don't seem to have it here in front of me. So this is what I'm going to recommend to you. You've been in it a while?
Yes.
So were you in it when it did beautifully, and then it pulled back and went back to about your price, and then it started another move to the upside?
Correct.
Okay.
It fell back into about the 390 area and then moved back up again.
Okay, very good. The reason why I wanted to know is I wanted to see what your tolerance was for when it goes against you. I mean, let's face it, gold stocks, you never really know, and sometimes they go against you, and as you're getting out is the very moment you're supposed to be buying them. But you've held on. First of all, I want to congratulate you, Goldfields GFI Limited. I believe it's a South African gold mining company. I remember Goldfields from when I lived in South Africa. I think that was the same one. And it's trading at 486, up 43 cents. The reason why I think that I don't want to interfere at all in your core position is that I would rather look at this as gold for the first time is showing that internationally, domestically, and emotionally, financially, in every way that I can look at it, it seems to me that gold is holding, just as bonds are the medium of safety in the interest rate sector. So gold is the currency, I call it the currency of fear, and I call it a currency of, how can I put it? I wanted to call it, it's unobtrusive. In other words, it's something that the majority of people never have, even unless it goes to all-time highs or major highs, and then everybody goes in and you see every store around you turn into a selling gold. And I'm looking at this and I'm saying to myself, gee, I think that gold has become a medium of safety that is equivalent to what bonds are. And if that ever changes in bonds, it would be quite a boost, I think, for gold. So I think that you're in the right area. Now, this is a little different to what I was anticipating in the longer term. I thought that gold, I had a target. I spoke about it for a very long time. I was very negative on gold from the peak F top in the Chapman wave way back in, was that September or something? 2000, let me just find it, the date. I should type that in. Yep, September of 2011. And I spoke about the H pattern. And then I said, I would not be surprised if the price is a little different. 1044 is the 200 period exponential moving average, that there's a test of that. Well, the test has come. It didn't take it out. It went down to 1050. And that's 6 points off, 5.5 points off that 200 period moving average. And now we've had a really good bounce. And now the bounce is what I would call more than a bounce. It's a bounce in the visuals, but not if you count the months. Look, 1, 2, 3, 4, 5. This is the 6th month that gold has been going to higher highs. It's still leg A to the upside. I think that you're in a very strong area. And if I look at Goldfields on not the monthly, but if I look at it on a weekly basis, even though I've got it possibly in a leg F at this particular point, I think it's the place to be right now at 487. Yeah, it could come back to 439. And all I'm going to say to you is the risk of not being able to get it again at a good price is worth keeping it. And I'm just going to say to you that I would recommend that if you want to do that, let's look at this again. What's today? Today is Wednesday. Let's look at it again maybe next Wednesday, see where it's trading. I wouldn't be surprised if by next Wednesday it's pulled it back a little bit. It's maybe trading in the 450s, maybe the 440s. But if it does that, then let's look at it again to say, where would you add to this and try to keep this as a core position? That's kind of why I'm looking at it in this regard. It's survived every little decline within a range, even though it's a 30% range, but it's really held well. I like it. I think that I'm going to recommend, Rich, that you keep it as a core position. Let's look later on, in about a week, Tuesday, Wednesday, Thursday. Let's look at it again to see if maybe you want to add to the position. I hope that helps you.
It does, Basil. Thank you.
Thank you very much for calling. I appreciate it. It's Rich in Portland, Oregon. We'll be back down at 211.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So now I've done the notation with the Reynolds American Inc. And I have before done Mo. Let's see, Mo. Yep, this is in leg C up. A, B, C, C in the weekly. That's A, B, C, D in the daily. That's for the Altria core. Oh, man, I tell you, this is very interesting. Now, there are people that don't like to buy, that just refuse to buy tobacco stocks. This is just your own. I'm just doing the chart. You're going to have to make a decision. I must be one of those rare people in the world who's never even had a single puff of a cigarette. I was a record-breaking sprinter in my youth. I had absolutely no intention of clogging up the lungs. So that was just my attitude. Okay, so we're looking at RAI at 52.67. It looks very strong. Yeah, I'm going to go with what I was saying before. It looks very strong. The weekly, if it crosses positively in the MACD after all this digestive movement, what events did you run? 100, I did the hurdles, I did the 220 and the 200, that's 220 yards and 200 meters, and the hurdles, and high jump, long jump, and relay. My best was actually the relay, the last runner in the relay. But that was all when I was a teenager. And some of those records stood for 15 or 20 years in an age group, 2 age groups younger than the seniors, because I ran under the age of 16, because I turned 16 only when I was in my senior year. Okay, so so here we go. RAI was Reynolds American Inc., and that looks, all I can say is if you're holding it, hold it. Don't do anything yet. It's a dividend and a price movement. Same thing with Philip Morris. All right, now let's just do this quick question about the banks. Deutsche Bank, I still don't think Deutsche Bank's the way to go. If you know, Goldman Sachs is not doing all that well. You know, there are so many other things. The biotechs are moving nicely. There are other things right now that I think, oh, maybe the XLF just to play it if you want to be in that area. I'd be a little cautious. I'd probably say XLF rather than a Bank of America looks exactly like the XLF. So that's going to be the issue. What I would also do is I would say to you is, just be selective. Now that we've had this run, and I have to tell you, just because we're going to wrap up and you'll be going to your swimming lesson and shows all afternoon, I just want to tell you that a move like this, look, that Nikkei is now going to expand this chart. Those down arrows that you saw said if there is a match, watch out. But there isn't a match right now. So I think this is a different cup of tea. We're now into halfway just about of that ugly candle of Friday. I like this action. And I think that, as I say, America could become the country of choice. This is the rally. When I did the webinar, I said maybe we can call it the Trump rally or something. It'll have a name, whatever rally it is. I don't really care. But most importantly, I'd just be real careful about if you bought right now, your risk reward obviously is not the same as if you were buying yesterday morning. So that's obvious, right? So be very selective. And what I would say to you is you could buy the stocks you like, but don't buy the amount that you were going to because you've lost your edge. So get a much, much smaller one. Now, as far as the VIX is concerned, let me go to another chart because this is going to be absolutely critical. Watch the volatility index. If it's gone into the 16s, yep, it's in the 16s, mid-16s now. This is just saying to me, it's in the area where there's buying. If it remains in the 16s to the 15s, buying pressure will be maintained. As it stands right now, this looks like a peak F failure, and that really benefits the market. And what I said to subscribers this morning, what on earth could get the VIX back into the 22 area, 26 area? I think we've had that bad news. Now there has to be another event. So as events go, I would not be surprised if the avalanche has passed, or we've just missed the iceberg, or we touched the iceberg, but we've survived. That's the way it is right now. So don't be afraid if you're looking at long positions, but get them smaller. You want to mediate your risk. That's the most important thing. And I'm still looking at shorts. We've got something we're waiting for to get as a short. Hey, folks, I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.